Thanks for clicking! London's real estate market may be showing some initial signs of stress, with the benchmark price dropping by $30,000 in just 3 months' time, and the number of new listings surging higher than they should for the month of April. This according to the most recent release of London's real estate data coming from LSTAR. Yeah, and unfortunately, depending on who you are, these numbers are likely to continue, as inventory is just going to continue to stack up amid these low sales numbers and a weakening economy. But as we'll see, we really shouldn't be seeing new listings increase at such a rapid pace, as it's really not that great of a time to be selling. With mortgage rates rising, prices falling quickly, and sales dropping to their lowest point except COVID that London has seen for the past 12 Aprils.
You are so negative.
Well, it's not me, it's the data, and it really shouldn't come as much of a surprise given current uncertainties. I'm not really sure how I'd rosy up prices dropping by $25,000 within a period of a month.
You want balloons or something?
Regardless though, I do want to take a look at this surging new listings data as they are coming amid the beginning of Canada's renewal wave, and I think it's worth considering whether or not that's the cause of the surge that we're seeing in new listings. So what I want to do today is go over London's real estate data for the month of April, take a look at the number of new listings coming to the market, and discuss the extent to which they could be due to the mortgage renewal wave, and then go over some implications. As we'll see today, London's real estate market is firmly in the favor of the home buyer, and most likely will continue to be so for some time. We will obviously continue to track London's market on this channel. Make sure you click like and subscribe if you want to get those updates. But for now, let's get into this data. Under the data, first up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, which was down by about $25,000 in April. The benchmark in March was $614,300, and that fell all the way down to $589,200 in April. So we have a benchmark price down by about $25,000 since last month, and also down about $13,000 since this point in time in 2024. Now, just a brief word on the benchmark price. That benchmark dropped by $25,000 in 1 month's time and is now only $24,000 away from London's post-pandemic low in January of 2023. That post-pandemic low also occurred while London simultaneously had a post-pandemic low of active listings, meaning not a lot of supply on the market, sitting right here, compared to right now when they're sitting right here. As such, if you are in the market with prices coming down so quickly, make sure you protect yourself. Finance conditions, appraisal conditions. If your realtor lacks the ability to protect your financial interest, get one that can. And as we talked about before, you don't even have to listen to me on that advice. Take it from longtime friend of the show, Phil Soper.
Take your time, put those conditions on financing in your offer if you feel you need them, get a home inspection.
That was Phil Soper, CEO of Royal LePage, telling you to protect your financial interest. The same Phil Soper who, among other things, told young people to consider variable rates when the money supply was doing this, said the market was going to return to pandemic highs in 2024, and said that the mortgage renewal wave was 75% over back in October, which evidently it is not. So that's even Phil Soper, ever the optimist, telling you to protect yourself in this market. No doubt drawing the ire of former sycophant agents everywhere. Strange times indeed.
Philip?
Next, the average price, which was up a bit in April. March's average price was $640,800, and that bumped about $12,000 to $652,800 in April. So the average price up about $12,000 since last month, now only up about $5,000 since this point in time in 2024. And my guess is the average price is up a bit relative to the benchmark as more and more of that higher end stuff is selling, which we can also see in the median price. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under. The median price was down, sitting at $593,000 in March, dropping a bit down to $590,000 in April. So that's a $3,000 price decrease since last month and a $25,000 price decrease since April of last year. And along with the price decreases, we're also seeing homes sell for more under asking. If we look at the sales to list price ratio, which measures by how much over or under asking the homes sell. So if the home is listed at 100 and sells for 95, the SLPR would be 95. That SLPR was 98.5 in March, now sitting at 98.2. So on average, homes are selling for 1.8% under asking price.
I just want to thank.
And finally, the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for London to completely run out of homes for sale, and that remained unchanged. The MOI in March was 4.3 and is also 4.3 in April, but that MOI is still far, far, far higher than it's been in London for the past 12 Aprils. So we have the benchmark price down about 25k, the average price up about 12k, the median price down about $3,000. Homes are selling for even more under asking, and we have the exact same relative inventory as we did the month prior. But look, as it's been for the past few months, it's the sales numbers that really tell the story, with sales sitting at their lowest point, save COVID, that they've been for the past 12 years. Meanwhile, new listings, on the other hand, the number of new listings coming to the market, are much higher, really much higher than we would expect them to be for the month of April, coming in at their highest point, save the 2021 COVID year and 2022 crash year that London has seen for the past 11 years.
But balloons!
But it made sense why listings were so high in April of 2021, when listings were only marginally higher than they are right now. Back then, homes were selling in a matter of 7 days and selling for 15% over their asking price. Compare that with today, and they're selling for 2% under their asking price and taking almost 3 weeks to do so. Given that, as we've seen, the real estate market isn't exactly in great shape, a point that was reiterated in multiple articles throughout April, it's not exactly clear why so many homeowners would choose this point specifically to sell their home. In fact, if we take a quick look at the sales to new listing ratio, the SNLR, which measures the extent to which a real estate market is in the favor of the buyer or the seller, with the higher number indicating a seller's market, that number came in at 41. The lowest SNLR that London has had in April for the past 12 years. So we have one of the worst Aprils on record for Londoners to be selling their home, yet they are selling their homes, or at least trying to, at a rate only seen during the pandemic boom and bust years.
This is an opportunity.
Is it worries over the economy that's causing people to list their homes en masse? I'm not sure we're there just yet. The economy is definitely weakening, but this is still early stages. But what about the renewal wave? According to CBC, Canada is set to see 1.2 million mortgage renewals this year. Well, let's take a look. Let's say you bought in June of 2020 and you bought at the average price of $486,372. Back then, that home was purchased right at that sweet spot when bond yields were at their ultra low, and you could get a 5-year fixed insured mortgage rate from TD at 2.37. So let's go with minimum down payment requirements. We'll add the mortgage insurance. We end up with a total mortgage amount of $480,500 and a payment of $2,121 with $406,000 due at the end of the term. Fast forward to today, and that same insured fixed rate from TD is 4.54. Let's plug in that $406K left available on a 20-year amortization. We get a payment of $2,565, a near 20% increase in your payment. With that said, let's remember, most lenders will let you re-extend that amortization back up to 25 years. That would put the payment at $2,254, a 6% increase in the mortgage payment, which might be a little bit more manageable. Then again, inflation is up by 20% since that home was purchased, whereas wages are only up by about 15.5%. Add on to that any additional debts that were taken on after that initial home purchase, and that even 6% increase could seem a little bit more daunting. So, is the abnormally high number of new listings due, at least in part, to the mortgage renewal wave that is in fact upon us? I wouldn't have guessed it. Payments haven't increased that much, at least not relative to how much they are going to increase if mortgage rates continue to remain elevated, which, judging from current bond yields, they very well could. So, look, in summary, in April, London's market is definitely correcting itself, with the benchmark price already down $30,000 in just a few months' time, and the number of active listings, the number of listings available, at a near 12-year high. with new listings coming in at a pace that we really shouldn't be seeing with the market so bad for home sellers right now. Something is going on that's causing these new listings to come in at a pace much faster than they should be. What that something is remains to be seen, though the next few months of data should be particularly interesting to see if this trend continues as home prices continue to fall. We will obviously continue to track how this all unfolds on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.